Hi, and welcome to our 10 Minutes at 10 for everyone. Today, we're going to talk about supplier contracts and travel. So, if you have supplier contracts, these are people who are contracted to deliver things for you over a certain amount of time. So it might be a consultancy agreement or accountancy, bookkeeping arrangement. It's people who you've contracted to do things, not the same as utilities or online subscriptions that you've signed up for. So these are generally in-person contracts. So today we're going to be looking at reviewing all of these types of purchases. So take each contract in turn and review them, and you're looking for things where you feel that there is a product or a service that you're perhaps paying more for than you should do. So it might be a gut feel. It might be that you know that there's a competitor out there that can provide that product more cost effectively. So we're looking for price reviews within these contracts. We're looking to try and save some money each month. Our objective for this challenge is to achieve at least £100 per month of profit, which equates to £1,000 per year, but it could be more than that, or actually it equates to £1,200 per year, but I'm just trying to give rough approximates. Just in my head, I'm thinking, no, you need to be absolutely precise. So that's the accountancy thing in me. So what we're looking for is to try and make £100 worth of profit or £1,200 worth of profit per year by trying to cut costs in these contracts. So have a look at the maintenance contracts that you have. It might be a photocopier maintenance or a car lease, that kind of thing. Are you paying more than you should do in those types of things? More for your mileage, more for the number of pages that you're paying to be copied per month, per quarter? Is that too much for your actual usage, and can you cut any of this out? Need to try and be brutal with these things. Then negotiate, shop around. You need to be having in your head that the cash is better in your pocket than in the supplier's pocket, and focus on that cost reduction. So one of the things that we like to do with this type of exercise is work through the traffic light system, and red, green and orange, the costs that you've got in your systems, in your accounts, and work out whether we like those costs or we don't like those costs, and trying to think about cutting the fat out of your contracts, not the muscle. So keep the bits that work for you, eliminate the bits that don't. So Harry, how would we use the traffic light system in this instance?
Well, firstly, we'd apply a red marker to any suppliers who we aren't getting value for money with. Maybe they're low value, but they're high cost. With these ones in particular, we should definitely be negotiating and shopping around.
Yep.
Now, what I would say is definitely shop around first, see what else is out there, because if you do go to negotiate, it does make it a little bit easier. And actually, I've seen clients negotiate with the big boys who people perhaps wouldn't have even considered negotiating with. And actually, they've returned a result. So don't be afraid of doing it. But what worked in their favor is they shopped around first. They saw some price comparisons. They looked at some functionality comparisons if it was a software-based item, and then they negotiated. And actually, you'd be surprised how reasonable suppliers are. They don't want to lose your service completely. And if they're not flexible about it, then you've got the option to say, well, you can look elsewhere. So with some of these, you need to reduce your services if they aren't willing to actually agree on a price reduction. Make sure you reduce some of these down. Now, you'll know whether or not they fit into the red category by a gut feel. Usually you'll be aware that one supplier is not quite fulfilling your needs. It's not quite giving you value for money. And remember with this, when you do look at these ones in the red category, sometimes the low price option isn't the best solution for your business.
Absolutely. So be careful this is where we talk about cut the fat, not the muscle. So if you're getting value for money and it's a positive return on your investment, then don't look to cut that cost necessarily, because you should be getting the return either in added value, money saved, time saved, that kind of thing. You need to be very, very careful not to arbitrarily try and cut cost unless you really can generate a cost reduction whilst not losing the quality of the item that you're receiving.
Yeah, you don't want to sacrifice on quality just based on the actual cost, because sometimes you lose so much value, the price reduction is almost redundant. Then continuing with our traffic light system, we would look at our orange suppliers. So these are the suppliers where you're not quite sure about whether or not you can get a better price or a better service elsewhere. So
but it still feels cost heavy.
Still feels cost
painful.
heavy. You still think, actually, I could probably reduce these. I'm just not quite sure how easy it's going to be and whether or not there's a solution out there which is more efficient. But with these ones, what we would personally recommend is putting together some form of cost benefit map. So list what you need versus what you get. And also on top of this, list what you want that you perhaps don't get as well. So it's worth having a look at each supplier individually, list what you want, list what you need, and list what you get, just to give an indication as to whether or not they're fulfilling all of your pain points.
Yeah, quite often in this area, you can find another contractor or supplier that will do something for the same price, but you get more value for it. So you won't have a profit reduction or more profit in your business by cutting your costs, but you might get more value out of that contract. So it's worthwhile shopping around.
Yeah.
So greens, Harry, what do we know about greens?
So these are the suppliers who are value for money. We're happy with what we get. They fulfill all our pain points. And actually, in terms of pricing, we're comfortable with what we're paying.
Yeah. These are the ones you know, like, and trust, aren't they?
Exactly. Yeah. We're familiar with them. We like them. We trust them. They're reliable. And greens may not always be the cheapest in terms of our suppliers, but they're the most value adding, and that's the most important thing. Remember, profit is not all about cost reduction. Profit is about value adding.
Yeah, so and profit generation.
Exactly. So really focus on these. Just as a classic example that we see quite often, if you have a marketing consultant, their prices will vary quite dramatically depending on which consultant you have. But the difference is in the return of the marketing they're doing for you. So really good example is marketing consultants. Are you getting a return on your investment? Are they actually driving sales that you're paying them for?
Yeah.
Perhaps the cheaper ones, not the best option. Perhaps one who seems really expensive isn't actually working for you. So it's really worth reviewing these. But you'll know if they fit into the green category or not by reviewing the return on your investment and the value for money you're getting.
That's quite hard to do, because marketing and management consultants and people who you bring into the business to help you improve will be cost heavy in the first few stages, in the first few months, but should generate revenue in the end few months. So with these chaps, you need to have a very clear idea of what you're trying to achieve, what that cost is going to be for say that 6-month period, and what the benefit that they're going to bring to your business is. And then you measure whether they're delivering what they say they should, so that if it's not working, you can terminate the relationship and look somewhere else if you need to. And if it is working, you can measure that additional return on in your investment into your business. So somebody who is brought in to improve your business should have a very clear idea of how much they should be delivering into your business and when you should be seeing those returns. So it's super important to measure those. Otherwise, you're just throwing good money away, and that profit could have been in your pocket.
And review these leaks regularly. Remember, someone who is once green may eventually end up in an orange category, and likewise, someone who's in an orange category and not resolved may end up in the red category.
Yeah.
So review these regularly. Prices of suppliers do change. Their quality of their service may be changed as well, depending on whether their team changes, etc. So just review these regularly.
And I think with these types of things, what you should be having is almost like a management meeting with them, at least weekly or monthly, to try and agree a clear action plan, clear results that you're expected from them, and measure whether you're achieving those results or not. And if you're not achieving them, then why? Is it because they don't understand your business? Is it that they don't understand your market? Is it that they understand perfectly, but you're not doing or not able to implement the changes that consultant has recommended? So sometimes you can see a consultant who has amazing results in other industries, but they're just not right for you, or other competitors, but they're just not right for you. So that doesn't necessarily mean that they're not doing their job, but so far as your business is concerned, they're not returning that investment. There is little value on it, and I would terminate those. So you should be able to get a good feel for those, and you should be able to measure those. So that's it for our 10 minutes at 10 today. Slightly under 10 minutes, so we've done quite well. Thank you for joining us, and we'll see you tomorrow. Bye.